Okay, so yeah, live. It still lives, right? Yep, right. Hello, everyone. Welcome to the final episodes of the options playbook. We are going to start at 8 o'clock. So yeah, hi, Sahamiki. Hi. So that yeah, as usual, we are going to start at 8 o'clock. So that we will be wait for the rest to actually join. So yeah, just new here, newbie. Oh, okay. So, in case you have you don't know because option under I did share the link already so that maybe you if let's say you want to learn start from the ground like the how is the option works those kind of things, right? Like chapter 1 to chapter 9, you can actually visit our option playbook pages so that you can learn from chapter 1 to chapter to the latest chapter, which is the today's chapter. You can replay as much as you want. Okay. So let me see like whether I could. Yeah. So if you are so you can visit these pages and there you go to live and then you can see like there is a various of the chapter for you to actually watch it. So like chapter 5, chapter 4, okay. But after today's chapter, I will be compiled into a one post so that you guys can and pin it on the top so that you guys can actually like watch the replay over and over again. You know. Oh, hi Ruzum. Hi. It's good to see you back. Okay. It's been a long week. Okay. So yeah. Hope you guys can actually like really enjoy the whole journey, because like as you guys know, this will be the last chapter of the option playbook. Yeah. Yes, yes, it will be the last one. Yeah. So not sure whether like I um still got extra chapter to share with you guys because um yeah, we'll see how it goes. We'll see how it goes. Okay. Okay. Yeah. Whenever I can. Yeah. But like before I uh comebacks, like comebacks to live, so you guys can actually like watch the All Win live as well, or maybe you could uh pay a visit to All Win so that he will be the speaker at the Move Fest Singapore. So make sure you guys actually like pay a visit to meet him. Okay. If you guys from Malaysia, I'll be in the I'll be at the Invest Fair at the Mid Valley, right? Yeah, at the Mid Valley. So if you guys do uh free having some time on Saturday and Sunday, make sure you guys also pay a visit because we'll be having an event there as well. I'll be there as well. Early in the morning. Okay. Today lesson is management. Yes, the management today's session is all about like teaching you guys like how you actually could use the platform to actually manage your position. like in terms of how you actually like place your stop loss and all those kind of thing. But if let's say I miss some of the questions, don't worry because like option hunter will be help me to address the question the your questions. Uh, so yeah, make sure you guys like also pay attentions on the chat box as well because some of your questions will be addressed by option hunter. Okay. Yeah. So like one so the before I'm starting the sessions, so one last advertising like you see like in the chat box the option hunter have shared the link. If you are keen, if you are in Malaysia, please you could actually like pay a visit to the Mid Valley so to see to visit us. And if you are in Singapore, Alvin will be at the Moo Fest. So yeah, I hope I do see some of you guys visit, and then we could have a little bit of chit chat, you know. Also, we definitely have some amazing uh promotions, yeah. So that make sure you guys pay a visit. Okay. So yeah, for it's very simple for Allwin Moofest Singapore. If you want to like we have a chit chat with me, you could visit the Mid Valley at the Invest Fair there. Okay, but I'll be there at the for the early of the morning only. Yeah, I'll be okay. So yeah. So are you guys ready? Like because it's 8 o'clock already, so that I'll be also like we'll be sharing the final chapter to you guys. Right, ready? Okay, all right. So yeah, so today's sections, before we start, of course, we will have our disclaimer as well. Everything I said, everything I shared is full, purely for education purpose only. Okay, and be so be aware that if you sorry, so that make sure you guys also read the characteristic and the risk of the standard options before engaging in the option trading. So whatever, and then we don't provide financial advice in these sections as well. Just like before. Okay, please do not take anything treated as financial advice. It's all purely for education purpose only. Okay. So once we have that in mind, so we will proceed our sections today. So the art of trade management. Yeah. So you guys have learned came along long journeys like we have been conducting since the chapter one, like a long call and long put, credit spread, debit spread, and like how we do the wheel strategy and all those kind of thing. And I've seen you guys actually did it, and then some of them like test on the water, like paper trading it, and then you guys I think you guys get the idea how we actually trade the options and then how the options works. And then when you buy a single call or complex spread, once your trades is gut fill, so at this moment you need to become a risk managers, right? Because like you need to manage your position because if it, before you enter into the trade, your analysis like because like you need to analyze what's the maximum loss and then when the premium hit until which kind of a level, then you close the trade or any kind of a profit, then you take profit. So you already have that in plan before your trade got filled. So that once your trade already got filled, you have to become a risk manager. So you have to manage the risk. So how actually we need to be what kind of things that we need to be aware. So there are three common principles of the risk management. So the first one is the plan the exit early because like some of the strategy as you will be aware is that is not mainly for acquire the stock or maybe sell off the stock. Okay. If you are going when you need to when in the market for the sake of the premiums or the profit, so you have to plan your exit. Okay. Is a no-brainer. Okay. Or maybe it's like if you already have a stop loss at TP level that you want to take, make sure you also plan that as well. So that's the things. Like you have to plan your exit when you're in the game. You have to plan when you are getting out as well. Okay, it's a very common sense things. Okay, and then the second things is that you don't actually like stop stop monitoring your price because like remember like the whole flows that we did, like you have to do conduct your fundamental analysis, those kind of thing. You still have to monitor how is the overall environments going. Is like, is the environment still in favor in your trade, or is the price actions, is it still intact, or maybe is it like your valuation still intact, those kind of things. You have to like really keep on monitoring those kind of the base management. Okay, it's not like set and forget, and then you conduct your analysis already. You don't care about those kind of the your macro levels or your technical level or your fundamental changes. You still have to monitor these kind of things. And also, like I mentioned a lot of time, for every single different strategy, like often like these is mainly for those like conduct a directional trade, especially when data is your enemy, like long call and long put, because you are a buyer, so that likely you'll be your data is your enemy. So that we have to be aware of like when is the time that your data is going getting higher and higher. So in draining, so it keep on draining and draining your profits, and it makes it much more harder for you to profit, okay, because of the probability things I mentioned. So like like usuals, like the first thing is that so the first thing we are going to cover is that like if you are doing those kind of the directional trade, okay, those kind of directional trade like long calls and long put. So but by the way, this is your illustration illustrative only. It's not like the static absolute value that I'm using, because I'm just giving you an example. Okay, be mindful, this is an example only. Since for examples, like if you already look at the P&L curve, okay, you roughly get an idea that theoretically, if let's say price move in your favor, it can be move up when you're long call and or move down when you long put. You could actually have like some sort of the idea like at what kind of the price of the options you want to close at when it hits like 30% gain or 50% gain, or even if you are greedy, you think that the price could travel more range, the magnitudes is high larger. You could actually also like set like 100%, 200%, 300% gain. It's entirely up to you. Okay, you need to make sure that you have a plan to take profit. Another thing is that if things doesn't works well, okay, if things doesn't works well, you could also like set at what price of the premium you want to close at. For examples, like if you enter the options at a dollars, so you want to close, you just want to lose 30 cents, so that you can actually place a stop loss order at maybe like a 0.7, so that when they hit that level 0.7, then you are out. It's like stop loss and TP, okay? SL and TP. Okay. It's very simple, this one. So can catch up like if let's say you can catch up, like comment in the chat box one, type one, if you can catch up. It's just a TP and SL. Okay, TP and SL. Okay, okay, I only see one. Okay, Go Zoom. I think because a lot of people busy today, right? Okay. So like you can actually set these kind of rules depends on how much you want to lose and how much you want to take profit, or even some of the people's, right? If you're long call or long put, because your max loss is a premium that you have paid. So some people they are they are they they don't actually have those kind of stop loss. They just let it expire because the max loss is exactly the absolute value of the money that he willing to lose. Okay, if that kind of a scenario is within your plan, then you can go ahead. Okay, then you can go ahead. Okay, so yeah, but if let's say you are on the short side, then it depends on whether you are doing a spread or a naked. If let's say you are doing a naked, then I think it's likely you need to have a stop loss, those kind of a thing, because if you don't plan to actually acquire the stock. Okay. Okay, the second one is the spread. Okay, it's the same as the long call and long put, because the difference is that it's just that you're doing a spread, you're defining your max loss and your max profit. Okay, so like for example, it's like if you are doing a credit spread, like a bull put spread, the market went up and then the premium keep on decay, and then you already have a 50%, you collected a 50% of the premium. You could choose to take your profit. Say, for example, you enter into a bull put spread at $1, and then now the price is like 50 cent. You want to close at 50 cent and take the 50% profit. It's entirely up to you. Okay. And then also like you could also close at 50% of the stop loss, or maybe 40% or 100% of the stop loss. Is entirely up to you. If let's say you're 100% of the stop loss, like $1, that if it's credit spread, $1 went up to like $2, you close it. Then that's another thing, sir. If you're good in credit, but if you're debit, then that's the other way around. You long at the dollar, then you may want to close at, if your stop loss is like 50%, then you have to close at 0.5 spread. Okay, 0.5 premium of the spread. Okay, or maybe if the underlying prices break below or maybe above your support or resistance, or maybe the macro environment change, you also can choose to close your position. Okay, you don't actually have to really wait until, if you think something is wrong going against you, and is the likelihood is going to happen at a very high probability level, you could actually close your position. That's the idea I want to tell you guys. It's not like when you do a credit spread and debit spread, because you are having a max loss, so that you just let it become the max loss. It's not like that. You can actually close if you still have the remaining premiums, so that you can reduce your losses much more lesser than your max loss. Okay, if those kind of environment happen. Okay, can you guys follow? Like if you can follow, please type one. Okay, type one. Then the second one is the idea I want to deliver. It's not like you need to have a definitive of the stop loss, or maybe you just let it expire worthless and having the max loss. Not like that. It's like when you are trading, if things like this, like it breaks your support or resistance, you think that it is already going against you, and then within your trading rules, you're supposed to be get out from the market. You can actually close your spread. Okay, it's not like you just let it expire worthless, because you still have some remaining premium, or maybe to be collecting back at. Okay, and also we have the income generation things. If let's say you are you are doing the wheel strategy, or maybe you are dollar cost averaging, collecting the stock over and over again. So some of the people, they will have some sort of the target as well. So says for example, it's like if I'm selling a put, if I manage to collect like 50% of the of the premium from from my sell leg, then I'll be closing out the position and then move on to the to the next expiration, so that it can speed up, keep on doing it over and over again. Okay. So, but some of the people, they could actually just let it expire worthless, then 100% of the premium they will collect, then they will move on to the next expirations. So it depends on how fast you want to roll your options. Like you short 30 days DT already, and then your options already collected 50% of the profit. So you need to think like whether you want to close it and then open another option contract, or you want to wait for another 20%, or maybe you just let it expire worthless. It's entirely up to you. Okay. I'm just telling you guys, you got, if even though you are doing cash secure put or maybe cover call, you also could have a certain percentage of the premium that you collected, then to be closed your option at. And also because like you are doing cash compute and cover call, eventually you already willing to actually buy the underlying or maybe sell the underlying, so that this is the risk control you already in place before you actually conduct this analysis. Remember, it's like this strategy is more on a long-term perspective, from a long-term perspective view. Okay, it's not like a short-term like this kind of the spread things. Okay, so are we clear? Are we clear on this part? Because once we have clear already, we are going into the platform demonstration, not platform demonstration, sorry, like how you actually can do on all these kind of things on the apps. Okay? Are you guys clear? If you guys clear, please type 1. Okay? Type 1 if you guys clear. Okay. It's a very simple uh common sense, right? Because like um it's just like when things goes wrong, you already know when you need to get in and when you need to get out. As simple as that. Okay. And yeah, how you actually place your stop loss and all those kind of things, right? And hold on a second. Yeah, that one will be the later part. And then also like I want you guys to actually also be aware that we mentioned this many times as well during those kind of strategy sections, and you also need to be aware of the assignment things, especially when your profit driver is your short leg. Okay, just one of the quick questions, like which of the spread your profit driver is your short leg? Can anybody tell me? Type in the comment in the chat box if you know. Which spread is your profit driver is depends on your short leg? I taught this before. Bull put spread. Yes, correct. It's a credit spread. Okay. As long as you are doing a credit spread, basically your profit driver, it will be your short leg. Okay. It could be like a bear call spread as well. Yeah, exactly. As long as you are credit spread, so you will be having this kind of problem. Okay. So some of I'll give you some of the example, like when you are doing a spread and then your spread went deep in the money and you're trading stock as well. So sometimes because your short leg is deep in the money, you could be it could be having some buyer to exercise as well. So out of a sudden, right, your short leg got assigned, but your long leg is still there. Okay, your long leg is still there. So if let's say you're doing a bull put spread, your short put got assigned already. So that out of a sudden before the expiration, you are long 100 shares of the stock. And then your long leg is still there. You have to make sure that if let's say your long leg is in the money, then you could exercise your long leg to offset your long position on the underlying. So that's how you define your max loss. Okay, so that's how you define your max loss. And then but the problem is sometimes your short leg got assigned already, but your long leg is out of the money. This is where the pin risk is coming from. This is where the pin risk is coming from. So if let's say you are facing this kind of scenario, make sure you actually close your um close your underlying position and also close your long position so that you can actually like still manage to actually minimize the losses. Okay, because when you actually like close your underlying prices at the price that you set, likely your long option will be having some sort of the profit as well. So that make sure you actually close it so to avoid further losses. Okay, because during if that kind of a case happens, right, you have to really manage it. Unless you're saying that if I got shot at these prices and then I'm okay to, for example, like you got assigned at $100 already for poo spread, and then you're okay to close at 98, and then you think that the price could be goes down further, you could actually hold your long put and then to make some profit out of it. Unless you are in that kind of a situation. If not, you just close your position. Okay, so there will be two kind of the things you need to actually uh be aware of. Okay, so when you do credit spread, it's not like a set and forget unless you are doing European options. Okay, you're doing a European option. Can anybody tell me why I'm mentioning this? Like if you are doing European option, it will be different. Okay, chapter 2 I already mentioned. I think chapter 1 or chapter 2. Why European options like uh you don't have to worry about this kind of the early assignment things. Why? Yes, exactly. Like it only can exercise at the expirations a day for the European options. Yeah. And then the best part is most of the European options is settled by cash. So it's settled by cash. So you don't have to worry those kind of a stock assignment, and then out of a sudden your portfolio got like 100 shares of the stock, or maybe shorting 100 shares of the stock. You don't have to worry about it because you can't buy index. Okay. You can't buy index. So that it only can be cash settled. Okay. So you don't have to worry those kind of things if you're trading index option or European option. Okay, most of the European option actually is just index option. Okay, and then if you are trading stock and then you are doing credit spread, okay, be aware that even though you define your risk already, if you're facing pin risk, your loss could be actually higher than theoretical max loss. Okay, because you close your underlying at the uh, X prices and you're closing your long position at the X amount of the option premium as well, so that your your P&L could be undefined, could be undefined. Okay, if you're trading stock. But if you are assignment, if you got assignment and then your both of your leg is in the money, what the short leg got assigned already, your long leg is in the money. You just exercise your options to offset your underlying prices. That's how you define your risk and make it a max loss. Understand? Can you guys follow? Like if let's say you guys can follow, please type one. Okay. How you actually manage the pin risk and assignment. Okay. So that when you look at the P&L curve, right, there is a max loss thing. That one is only given that if both legs is in the money, you got assigned already, then you exercise your long leg and then you offset it. Okay. If your long leg is very far from your short leg, and your short leg got assigned already, your long leg out of the money, you cannot exercise your options. You just close your position, okay, to minimize the loss, unless that your thesis changed already. Okay, it could be happen. So don't assume that you do a P&L curve already, then you see the max loss. This is the maximum loss. So I don't have to manage it. You still have to manage it. Okay. But if you're doing a debit spread, no problem. If you're doing a debit spread, but if let's say your debit spread went deep in the money as well already, then you may need to manage as well, because your short leg also can can assign one. So what you do is that you exercise your long leg to offset, then your max profit will be defined already. Likely you will be making profit already if both leg is in the money, deep in money already. Okay. All right. So that as long as you have a short leg in your spread, you have to manage it unless you're doing a European option. Okay. And also the second one is that liquidity contractions. Okay. Especially some illiquid stock. Okay. When is the final minutes on the Friday, the liquidity can really dry up really like crazy one. Some of the ticker symbol. Okay. So that when the spread widen, okay, you may close your position at an unfavorable price, because spread widens already. $1, maybe you bought it at $1, then the TC doesn't work out. The price went down, and then now it's 80 cents, but the bid ask is like only 30 cents willing to the highest bid is only like 30 cents, so that you only can close at 30 cents. So when the bid ask is widened, that's one of the risks you need to be aware if you're planning to close your position at a certain level. Say for example, like you initially bought $1, long a call at $1, you plan to exit at 70 cents. Okay, when price goes down, your option value goes down, right? Okay, it hit 0.7 already. You trigger your stop loss already. But the problem is like your you want to sell, but your bid is like maybe like 0.5 or 0.6. So you can't fill it can't fill at 70 cents, because like the highest offer prices is like at the 50 cents or 60 cents. So that is the bid ask problem. Okay, make sure that you also when you do your managements, and then you have to be aware that liquidity can contract, it can be widened. Okay, so that you have to manage it if you are already planning to exit the position. Okay, can follow? If can follow, please type 1. Okay, I want to make sure you guys understand this. Okay, are you guys from Malaysia? Yes, we are from Malaysia. Yeah. If you guys, by the way, if you are free, please pay a visit for the Invest Fair at Mid Valley. Okay, I'll be there as well. Okay, all right. I see a lot of people like type 1 already, so yeah, you guys have to be aware of that. So how you actually like uh go manage your position? You go to your account tab, and then you select your position, and then if you buy the option, you sell to close. Okay, remember, this is chapter 2. I made it very clear already, chapter 2. If you sold the option, you buy to close. Okay, so that we are very specific whether we are buy to open or sell to close, sell to open. And then when you want to close the position, we do the opposite way. Okay, right. So like in these examples, like we have a calendar spread. Okay, I know I didn't teach this spread, but like you just treat it this one like I have a one short leg of the Goldman Sachs of the call. So I can actually place a trade, and then I can, if let's say I'm shorting it, I could actually buy to close the position. Okay, I could actually buy to close the position. Okay, because I'm a short leg. So that if I want to close this position, I can buy to close my position. But if let's say I'm a longer option, like 1, there's no negative, okay, just 1. I can actually like press this one and trade, and just press on sell if I'm long leg, okay. But in this case, in this example, because I'm a short leg, I need to close my position. I need to buy to close. You can see like I already have one short positions, right? I can actually buy to close. Okay, and then the second one is that you could actually set your TP. You set your stop loss and profit. Okay, you can And then you can also like set your order types, like whether you want a good to cancel or maybe day or maybe like time in force. And how you can actually do it, like if you already have this short leg here, but sadly we only can do a single leg, or we can't do the spread of the TP and SL now. We only can do a single leg. But in case you are doing a single leg, uh you can actually do it this way. You just tap on the option position that you want. It will pop up this dialog. You can see there is a TP and SL here. Okay, you tap on it, and then the order type, you if you want to set both taking profit and stop loss together, you can actually one cancel the other, and then you only if you want to go to cancel, you can actually choose from here. If you want to like set only today trigger, you can set on day. So it will pop up these two things. So what you can do is that you can set your take profit. For example, like I shorting at 5.58. I could set my take profit target at $2, 2.00. I could set like that. If let's say the stop loss now is like 3.53. I could actually like set my stop loss at 6. But if let's say I want to set a lower, even though it turn go against me, I still profit. I could set at 4 as well. Okay, because when it goes up, it against me, right? But now because it's like trading at 3.53, I already having profit. I can set my stop loss stop profit. Okay, my stop loss at the taking the profit at the stop loss there at like $4. I could do that as well. But if let's say I just want to let it be, I could actually set like $6. If it hits $6, then help me get out. If it hit $2, collected my premium, I just I could actually set like $2, $1, something like that. Okay. If if you're long, it will be the other side. Like say for example, long, assume that this is long, not short, because it is short, I know. Assume that this is long. I long at 5.58. Okay. So I can take profit at 10. So I just set here 10. My stop loss maybe like 2.5 like that. I can place here 2.5. So this is for single leg trading management you could do on the Moomoo apps. Okay. So like for examples, like if you are long options already, you could set 10, one contract, and then 2.5. If you hit 2.5, then you just one contract, you just submit. Then you will be having these kind of things like the trigger price at where, the sell queue at where. You could see it all from the order there. Okay. If you want to cancel the order, you also can cancel the order. It will tell you where you take your profit, $10, like the in this screenshot have set like $10 and 2.5. If you want to cancel, you also can cancel the order. Or maybe you want to adjust, you can simply adjust from here. Simply adjust from here. Okay, you can set one. You can set. Okay. Okay. So you guys can actually like visit the apps, and then when you have the position, you guys, even though you don't want to set, you guys also can explore, like tap on it and then see like how is all the apps working around. So by right, it should be looks like this when you are doing some management things. Okay. So the next one, it will be roll. Okay. How many people doesn't know what is roll? Okay. Type 1 if you don't know what is roll. Type 2 if you know. If you know what is roll. Okay. A lot of people is like out there like keep telling, oh, you guys don't know what is roll, right? Okay. Okay. Rolling means what, you know? Rolling means that says it just close your, okay, what rolling means that is just close your current position and then open another position for a longer expiration. Okay, for a longer expiration. Like say for example, if I short $1 put, okay, $1 put, I can then after the 15 days, the market didn't hit my strike price. The market go up instead. So my premium will be going down, right? Like $1 went down to like 0.5. I'm happy. So I'm having a 50% of the profit already because I'm short, right? The maximum is the profit I could get is 0. So I'm okay to close at 50 cent. I short at $1, now it's 50 cent. I'm okay to close at 50 cent. But I also want to open another position at the longer expiration. Okay, like maybe another 30 days or 14 days, up to you. Okay, longer than the current one you have. The current one, maybe you still have like 2 days left. You collected the price already 0.5. You're okay. You're okay to close the position. So, and then you want to open another position for the longer expiration. Maybe you short another different strike price, or maybe the same strike price at like $1.20, maybe. You want to sell this strike price as well. Okay. But you lose 50 cents. How is that good? No, you're shorting the option. You're shorting the option. You short at $1, now down to 0.5. You are making money because you are shorting the option, not buying the option. Okay. I'm just giving you an example. Okay. Or from the credit side. Okay. So you if you have this kind of the mindset, you could actually use the roll button. Okay, you could use the roll button. But before you do that, okay, you have to choose your futures expiration first. Says for examples like if you're short an options for 14 days already. So after 7 days, you still have 7 days left. Your profit, your $1, then now $1 premium now becomes like 0.5, so that you already have 50% profit. And you okay to close with it, and then you want to close your current position and open another position at another 14 days at a different strike price and premium at $1.20. So that you could, with these things, you can actually, this kind of the things you need to do is that you have to like things whether you are doing the new expiration is 14 days, 20 days, or 30 days. It's entirely up to you. That's the first thing you need to do. Okay, you need to identify how long you want to do for the next option you want to sell at. This is the first thing. Okay. The second thing is are you okay to close your current position at this level now? Okay. So what you actually can do, for example, now I short at 5.58. I'm short at 5.58. Now the price is like 3.53. And I'm making profit, right? Because I short at 5.58, I could buy back at 3.53 at the cheaper prices, right? Correct or not? Can follow, Can follow? Type 1 if you can follow. Okay, I short at 5.58, but now it's 3.53. I have profit. Correct or not? Okay, now assume that I'm happy. I'm happy already. Okay, now like January 16 is going to expire. And then I want to do the next month expiration. I'm okay already. And then now I feel like I want to do like the February one. So what I do, I press this button, roll. Okay. So I choose the expiration first. So it will jump into these pages. It will jump into these pages. Okay. And then I choose my expiration first. Says, for example, I want to choose like February 20. And this one have 45 days expiration. You can choose like 14 days, 20 days, 30 days. It's entirely up to you. Okay. So I pick my expiration already. And then I pick the strike price that I want to open, that I want to sell to open. Okay. Can follow, Can follow? Okay. I want to close this position and I want to open a 45 days expiration at 1000. I want to short this option. Can follow? No. Okay. uh, I want to close this position now, right? 5.58. Now is like 3.53. I already have profit. And I plan to short a new options. After I close this position, I want to open another new position also. Like I want to open this 45 days expiration, 1000 strike price at 19.50. Okay. Okay. Can you follow? 9002. Okay. The logic is I want to close now. I also want to open the position now. Okay. And the expiration I choose is at 45 days. You can be choose 14 days, 20 days. It's up to you. Okay. And I also want to short this strike price. So you don't have to traditionally you have to close your position this position first. Like you short one, you buy back at 3.50, then you go here, you sell another options, right? Now you don't have to do this. You just have to press roll. You see, and then you already choose your options, right? You see the position here. This is your position, right? Two two, year 2026, January 16, 1000. Okay. Because you are shorting it, you sell to open initially. Now you want to buy to close. You can see here, buy to close. Okay, can follow? Type one because I want to make sure you guys can follow. I know it's a bit confusing at this moment, but yeah, I want make just now I see you guys can follow already. Yeah. Okay. Because I sell to open initially, now I got profit already. I buy to close. This is your current position. So I want to close this position. After I close this one, I want to open a new position as well. The new position is 45-day experience that expired on 20th February of 2026, 2026, February 20, 1000 call. And this position, I want to open the position. So I sell to open. Okay. So once it's confirmed already, I just click trade. Okay. It will help once this position closed already, it will help me open this position as well. So this is called rolling. So so the rolling is like some kind of the fancy terms, but basically it's just telling you you can close your current position and open another position. Okay. Can you guys follow? If you guys understand, please type one. It's just another fancy name. Close your current position and open another further expiration position. It's just as simple as this. Okay. Is there any advantage paying lesser commission? No, it's the same. It's the same. It's just like from another perspective, like you close your current, also you want to open another one. You don't have to do 2 times. Okay. You're selling at exercise price at 1000. Yes, I want to sell to open this position because I already got one right. I'm okay to close this position. Then I want to sell another one. Okay. 2 times commission? No. You close your position is 1 time. Then you open another position is 1 time. It's just same like when you open the position, you got 1 time. You close back, you pay also, right? Then this one is the same. You open your position, then 1. It's just like how you close your position. It's just another fancy name only. Okay. You close your position, then you charge 1. Then you open another position, you charge 1. Is that one for 1 share? This is not share. This is option. This is contract based. Okay, but if you guys are new here, okay, make sure you guys also like pay a visit on my pages because I do teach options like from chapter 1 to chapter 9. Roll is 1 action to close the existing position and open a new position. Correct. Basically, you just close your current position and open another position. And then it's just one of the order types for the options. Okay. And then also I want to remind you guys, if you're rolling, right, some people says that you must be have profit only rolling. Some people are, but no, rolling is it just simply means that you close your current position. This position, it can be profit or losses one. If let's say you losses already, it's deep in the money already. You want to roll it. You want to close your current position. You can lose money. You losing money, then you open that. You realize your losses already, then you open another position. It can be like that as well. In this example, it's a good example because like we taking profit already, so we want to roll. We want to roll to the latest further expiration and then open another position. But if let's say this one doesn't works well, I want to roll as well. I want to close your current position and open another one. This could be lost, then open this position. It can be happen as well. Say for example, if the position is short at 5.58, if the current price is like $11, it's at $11. So I'm losing money, right? I already losing money, right? So, but I want to roll because like I don't have time anymore. I think it can. I think I could like get more premium than to cover these things. So I closed my current position. I realized my losses. I short at 5.5x. I closed at $11. Then I open a new position, collect at 19 point around 19.50. Okay, it can be like that as well. So they don't make it so don't make it like so complicated. Says that I must be having a profit only can roll. No, roll is just simply mean that close your current position and open a new position. As simple as that. Okay, all right. Everyone clear? Uh, so far I think it's like we can't roll a spread now. Only for single leg for now. Yeah, if I'm not mistaken, only can roll single leg now. For spread, still can't. Okay. But you could see whether like rolling can it do spread or so far I think only for single leg. Okay. That's why when do spread I usually just like manage myself. Okay. It's not a spread thing, it's a single leg thing so that you close your current single leg option, then you open another one. Okay. So like and then also like the next one is that exercising versus the assignment. Okay. So like um because remember just now I got tell you guys like if your profit driver is your short leg, right? Sometimes like you need to exercise your long leg to actually offset your underlying prices, right? So before you do that, you have to make sure that you have the buying power to actually buy the options. Okay. And then your long leg, okay, if you want to exercise, okay, if you want to exercise your long leg, you have to make sure that there's no pending order on your long leg to sell your options like your TP or your SL. If you want to exercise your long leg, okay, you have to check that before you exercising it. So say for example, just now I mentioned that your short leg got assigned already, you already have a shares like short put, then you already have a shares plus 100 of the underlying. So you want to offset this position, right? So that you go to your long leg, you check whether you still have any order, those kind of things. But usually you do spread, it's very hard to, it's very rare that actually you go to the single leg and then do a P&L things. But if you do that, you need to check like there's no pending order. Okay, then you just exercise your long leg if it's in the money, then to offset this position. Okay, and then when you exercise, you make sure you need to have a buying power. Okay, because like um if you're doing that, you actually is like uh have to meet the buying power margin. If let's say you doesn't have it but it's in the money, you can actually just like email to our dealer to exercise it for you if it's in the money. Okay, but by right you should be able to actually go to our apps to early exercise your option to offset your what your position. Okay, but usually when you do these kind of things, right, before like few days before, our system will be actually sending you the notifications. like this one. For example, it would telling you like you hold a option about to enter into the last day, blah blah blah. This is my position. And then it will just remind you for long option, you may early exercise them or let them lapse. And then this kind of the notification will be keep on popping out to you. Okay. And then, so if you want to like do the early exercise, if you're assume that if your short leg got a sign already, you want to offset it, and then you can do early exercise. Okay. Or maybe your long leg already, you is deep in the money already, then you don't want to close your position, you want to share, you can also early exercise your option. It's entirely up to you. Okay. So what you can do actually, you can go to account tab and then go to more. In the trade session, you select option exercise. And then there's two things you can actually do. One is lapse your long leg rise. For example, it's like if let's say you already have a long leg deep in the money already, you don't want to expire in the money already, trigger the auto exercise, you can actually lapse your options. But if let's say you lapse already, but if you are planning to exercise it to offset your short leg, don't choose the lapse. Okay, because lapse simply waive your rights to exercise. Okay, it's waiving your rights to exercise. This is only for those who assume that your long options deep in the money already, but he don't want to get the shares, so he do the lapse first. Okay, he would want to trigger the auto exercise, so he can lapse the option first. Then he could close the option position before the market because the market closed or before the option expired. Okay. And then also like when your short leg got assigned already, you want to early exercise your long leg, you just choose exercise. Okay, you just choose exercise. Okay. So you and then you confirm, you check, then it's fine. Okay. So how you actually do that, and you can actually like go to your accounts. You see there's more here, okay? More, and then you see there is a option exercise. So if let's say we want to exercise this long leg, it will shows all the long options are available here. Okay. If let's say I want to like exercise the Goldman Sachs call for the expiration one quantity, I could choose exercise. So once I choose the exercise already, I got two options. One is lapse, one is exercise. Okay, one is lapse, one is exercise. So if I want to offset my underlying, okay, underlying that that got assigned from my short options, I just choose this one, exercise. Okay, don't choose this one, choose this one. I just exercise my option to offset my underlying position. If let's say if you're choosing the lapse, you don't have the rights to actually to exercise your options. Okay. Okay. So like yeah, but this one is only given that you don't want to, you just want to manage your position, and then you don't want to if long options is deep in the money, you don't want to take the auto exercise, and then you worry that you didn't manage your position, and then you don't want to share, you actually don't want to share, then you just choose less. But actually, if you long a call already, right, at the out of the money, then it goes deep in the money already. Usually people won't let it expire, but expire and then get the shares, right? Usually they would just take the profit already. Okay. Unless he really want the shares, then he will just like let it trigger the auto exercise, then it becomes the underlying. But for call options, right? You buy at $1 already, now it's trading at $30. Usually they will just close the position. They don't want the shares one. Because when you auto exercise, basically your whole premium goes. It's just like $1 goes, then you're holding your underlying at a very low price. Okay. If that's what you want, then you just let it expire in the money and let it trigger the auto exercise, given that you already have a buying power. Okay. Okay. So that's the things you need to be aware. So is if you're in the, unless that there's also some of the scenario that if you initially you just long a deep in the money options, you just want to like make a few bucks. If it goes up for a few days, then you just close your position. But before that, you can do the lapse on it. Is also you can also as well. But usually when you do this kind of thing, you will manage you will be managing your position on spot lah. Yeah. But I can't assume anything, right? Because anything could happen. Like everybody is different. But basically, what lapse mean is that you lose your rights to actually exercise the options. Okay, and then exercise is just like exercise your long options to offset or maybe to get the shares. Okay, can follow? Like type one if you can follow. Okay, that's good. Yeah, yeah. That's the whole things lah. Okay. Okay. So that I see there's some of the questions already addressed by the option hunter, and then make sure you also see the chat box there. Okay. If you yeah, and then if you want to early exercise one contract, it will just tell you those kind of a mandatory option exercise, and early exercise must apply to when only an early exercise request applies only when the option is in the money amount of the 0.01 or more. Okay, and allow mandatory options is checked. Your earlier request will be processed despite the moneyness after the close. Okay, so you make sure you read this kind of the terms first before you actually proceed to exercise. Don't simply like, oh, got it, then you submit like that. Okay, you have to read it first. Okay. So and then if the allowed then is not checked, your early access request will be rejected, and in the money fails to reach or more after close. So make sure you read this thing before you submit. And after you press submit, it will just show you a review. Then you just if let's say everything okay, you just confirm. Yeah, there you go. Early exercise. Okay. Most of the times, right? If you do a credit spread deep in the money you already got assigned, you use this function a lot. You'll be using this function a lot just to offset your underlying if you are not planning to have that underlying in your portfolio initially. Okay. So if it's approved already, then it will become like that. But if it doesn't have, if it trigger the risk assessment, like your buying power not enough, those kind of thing, right? Your request will be fail one. Okay, and then you will be having those record like fail, 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 those kind of thing. Right? If it's success, it will be having a success exercise as well. Okay, so like you have to establish the exit plan. So that's the whole summary things. Like you have to establish an exit plan. You have to monitor your expiration risk. You have to if let's say you're doing a directional, you also can pre-plan your profit taking. Your understanding the wasting is option is because if your long option is a wasting asset, if you just let it expire worthless, the maximum premium is your losses. But if you do credit, it can be unlimited. That's how it comes from. And then also, I wish you guys can maintain the discipline as well. You just follow a structured mechanical plan that could help you. When you need to get out, you just get out. Okay. When you need to take profit, you just take profit. Okay. Like when you are doing this kind of the managements, right, try to reduce your emotional decision making. Unless that you could you 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 unless you already have know what you are doing and then you have a new plan that suit your could be like adjust from your current position. Yeah, that's another story. But if you don't have a plan B, plan A 1.2, so you just like your this kind of a pre-planned things is what you should be doing. at the beginning of the session because you already planned it, so you just execute it. Okay. Some people they don't put the stop loss on the or the max profit one. They just let it ride and then see how the market works. If let's say if go favor, then I take profit. If let's say it's go down for my call option, I just let it max loss. Some people do that as well. So different people having different kind of the management skill. Okay, different people having different kind of the management skill. So that in these sessions, I'm just introducing like how you in Moomoo how you actually navigate this kind of the option exercise. If you want to do rolling, if you want to set your TP, you know, that's how you actually navigate it. I'm just simply telling you guys how you actually can navigate this thing in these sections. So yeah, that's the whole sections about it. Like that's the final chapter I'm going to share. Okay, all right. So yeah, is well, I'm 9 o'clock already. Okay. If mm, I may miss it, I'm doing a sell put expire tomorrow. Do I need to close it manually before tomorrow market close? It depends on whether you're expired in the money or out of the money. Because if you're doing a sell put, then it's a naked sell put. I assume if let's say if your plan is acquire the shares, then yeah, you can just let it expire worthless, then you get assigned, take your share if it's in the money. But if let's say it's out of the money, you could actually let it expire worthless and then you collect the full premium. It depends. It depends what your initial objective. Okay. Yes, you can actually look at the option hunter reply. Okay. All right. So make sure if you guys are new here, please make sure you scan the homepage of the option playbook. And then we also share this kind of thing. And then also like if you guys want to recap on if you guys are new here, make sure you guys go live and then because I see some of you guys like the haven't learned about the basic. Okay. And then there's a chapter one, chapter two, chapter three, four, five, six, and then until the end of the okay. If you're anyone new to option, you can learn from yes, we also have Moomoo AI to help you. You can ask one, like says for example, do I have my platform in? Do I have my platform? Hold on a second. Let me log in. We have this Moomoo AI. You can ask anything if you don't understand. Okay. Reasoning. Now even we have the expert as well. You can see you can change your model the expert one. It will tackle the complex task lah. Okay. Okay. This is the latest version of the model for Moomoo AI. All right. All right. Okay. So yeah. Okay. I assume that your hope your sell put is like out of the money lah. If you are in there for the sake of the premium, but if you want to initially you already want to acquire the stock for your short put, then you just let it expire in the money. Then you can take the stock. If it's out of the money, then you just collect full premium. So you I assume that you already have a plan there. Depends, is in the money or out of money. Okay. I didn't see the expert in Moomoo AI. You may need to update. You can actually go here. There's a setting. You can go here. You can see there's a update. You can update it. You press the update, it will updating. Okay. Make sure you update. Okay. All right. So yeah. So that's my last live for the option playbook. Not sure when I'm coming back. And then I will. So thank you guys for staying over the courses. I know it's been a long journey, and then I know it's a lot, but yeah, um, I'm glad you guys stay until the end of the courses. I hope you guys do learn something from me, and yeah, it's it's a wrap. Okay, it's already a wrap. Okay, thank you guys for staying. It's already half years, right? We've been doing this like every bi-weekly Thursday. We doing live, and then I share those options like this kind of material for free. You know, yeah, yeah. Thank you guys. But uh, yeah, that's the end of my option playbook series. Yeah. Yeah, and I would like to like apologies for sometimes like I went like went too far, too theoretical. If I didn't explain it well, I apologize I apologize. And yeah, but I still hope you guys get the idea. Okay. Cause like once you guys have learned these things, right, I think you guys can understand a bit. Like sometimes option can be complex, but sometimes it doesn't have to be that complicated. Okay. You just have to get your foundation done. And the best part is nowadays you got this kind of the Moomoo AI, right? And those kind of AI things, you know, I was so green when I first started. What do you mean by green? Making money? Or your green got many ways. Okay. Yeah, I see a lot. Thank you. Yeah, thank you guys. Yeah, thank you. And I'm not sure, like, I'm so green, man. So confused, don't know what to do. No, green went very blur. Okay. All right. Yeah, thank you, Ivy. Thank you, Ivy, for staying at the end of the courses. Yeah, thank you. And then, yeah, uh, I think nothing much left for me to actually, yeah, to 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 teach in the option playbook series already. That's the whole 10 chapter. Half year already, right? Yeah, it's half year already. And then the platform is getting better and better and better. You know, like the strategy builder, you guys already know what kind of a question you need to ask yourself. Of course, I didn't cover neutral and directional lah. Yeah, because I want to keep it simple. Once you understand those foundation, you guys will figure out yourself. You see, if you do four legs, one of your leg if you do both also pin wrist, those kind of thing, it's quite scary. You need to exercise both leg to counter. But if it goes one way, you only have to manage one side lah. And then I already taught you guys also the expected move, and then volatility. You guys learn the IV rank and IV percentile already. Then the put call ratio, I think you guys know what it means lah. Okay. And then even the probability analysis using the BSM model. Some people do iron condor, sell here, buy here, become an iron condor. Do one spread, or maybe you want to do a put spread here, a call spread here. No probability. If you want a two standard deviation, you can press here. Oh, sorry, excuse me. And then we also have the open interest and volume. You can explore later because now I bet you guys your basics is already been really good. And then yeah, Of course, I didn't cover jacks. Okay, I didn't cover jacks. The gamma flip and all those the put wall and the core wall. What is the gamma exposure zone? I didn't cover this lah. Of course, like that one can leave it up to all win or maybe sometimes in the future. I don't know. Okay. And then this one for you to spot the 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 premium, I mean like the overpriced options, but it's very hard to actually like find because likely when you found out, right, it's already been arbitrage. So yeah, unusual option chain, like see the flow, it's just like a stock lah. But yeah, if you find this useful, you can actually see the flow or maybe the normal one. Top option if you or like see which one is having the most volume. But usually I will be just staying over the DCs. Keep it simple as here. Okay. Now like you just went through all the things. And then oh yeah, you guys know like you can actually see your fine if you're trading a stock, right? If you want to navigate those earnings data, you guys know you can visit these pages or not. Okay. Look at it moved to financials already. Okay. You guys know, right? This you could have this earnings tab and then you can view all this strategy. No strategy, sorry. All this data info. Okay. And then how you want to use these things is not sure whether I'm able to cover in the future. Huh? Okay. You guys know or not? Like this one. Type one if you know these features. If you realize that it's in your desktop, I think it's in our Moomoo apps as well. Type one if you know these features. No, nobody knows. Nobody knows these features. Okay, this is like option traders, right? If you are doing earnings things, right? These are the all is gold. These are gold. It gives you a lot of context. You see, this basically tells you every time during the earnings what it happens. Like this one after earnings is gap up. This one after earnings is gap up or down. And then you see the IV. It downs, IV crush, IV crush, IV crush, IV crush, IV crush. Then you see. And then this white line is the expected move. It's the expected move. Okay. Can you actually structure a strategy from here? Do you think we can structure a strategy from here? Let's have a conversation. Seems like it's the last sections already, right? Can you construct a strategy from here? After the the green the bars, right, is the price gap at from the close. You can actually click here, open. So assume that this one is gap up already, then is open here. Okay, so the green bar is that large. Okay. May 2024. May 2024. So it's gap up already, you see? Gap up. This one gap up, but stay within the expected move. Expected move is here. One day, the day before, the last number of the expected move before the earnings release. Okay. So this is the expected move. But you see, every time, not every time lah, most of the time, it stay within the expected move, right? It stay within the expected move. Say for example, assume that our expected move is like if let's say got earnings lah, like five about $6. So that the expected move is like $6 up or $6 down. But we can see historically how many times the price move beyond the expected move. Stay within, stay within, stay within, stay within. At the open, at the open, okay? You want to put close also can. Okay, you will be changing some data one. Nah. Usually I look at open because like one of the or even because one of the strategy I look at when market open after the earnings I close my position. Last time. Okay. Within. Okay, this one exceeded. Exceeded, within. Okay. So what you can do here? And then you know that IV will crush also. Your extrinsic value likely to be crushed. What you can do? The bottom part you can ignore first. Usually you just see this whether the IV crush is positive. But yeah. Yeah, the answer is there already. Option hunter. Sell option for option. Yes. Yes. But if it happen this kind of things, likely you will be losing money, right? If you are doing a credit call spread, like a bear call spread here. Market went up, you lose. If you're doing a naked one, right, you lose a lot, right? So what you do? How you define your risk? If you do a naked call, you will be lose a lot. So you do a call spread. Sometimes you do a call spread, you can define your risk law. Something like that. Okay. If it too much, if it move beyond already, then out of a sudden early assign already, then you just go to the apps, early exercise your options, so you can define your risk. Okay. Assume lah. Okay, I'll give you one of the example. Assume that this is earnings already. If I sell this one, sorry, custom. I sell this, so the expected move is here. I sell this one, buy this one. Expected move is here. I sell this one, buy this one. So my max loss is 170. My max profit is 80. Most of the time I see the IV crush, right? So if I assume if the stock do stay within this range, this is the expected move. The expected move is here. The expected move is here. So most of the time I see it stay within, right? Let's see. Most of the time it stay within here. And if let's say IV crush, right, making money, well, what if I do a put spread or something? Stay here, IV crush, I collect faster. No. But the P&L, you need to be aware that the R is not that good sometimes. Depends. Some people feel okay. Okay. No, like but and then also like how you want to backtest this in a better way. How you want you know that sometimes like earnings then you can check like whether the IV is really high. Sometimes like before earnings it spike a lot. Like number of days before the earnings it goes up. Number of days of earnings it goes up. Let's see. Number of days earnings before it goes up. Then IV crash, then IV crash, then IV crash. Number of days of earnings it goes up a little bit. This one a little bit only. Wow, this one crash all the way. This one at the high side already, then it crash. High side already. Goes up, the high side, then crash. So how do we actually trade this? You tell me. No idea. Hmm? But there's something for you to actually research. Okay? All right? It's not crash, it's crash. Okay. The Candy Crush crash. All right. So earnings things, I didn't cover earnings lah because like in the future maybe. Okay. Let's see other stock. You also have this data, no? From close, close you exceeded. You close at outside of the expected move a lot. Let's see what's the highest and the lowest. Usually, yeah. What's the maximum expected move during that period? Usually, I just yeah. Every crash, every crash, every crash. Is it, if every number here is positive, likely to be every crash. It's just the matter of the magnitude. Okay, so yeah, you can actually explore the earnings here and then see how you actually want to conduct a strategy here lah. So yeah, so I think it's like 9 to 19 already. You guys have any questions about this thing? About this thing? Okay. Oh yeah. Okay. All right. So yeah, that's the whole session's like disable option logic. Mm, this one, how to protect position? Confirm that recent update temporarily disable the logic for. Hmm. This one really, I think this kind of incidents, right, is just a technology risk. You have to deal with the you have to deal with the CS and the any deal with the CS. Yeah, I think I don't have the answer for this one. Likely you need to deal with the CS. This one. Yeah, but this kind of risk, right? Never been facing this before, actually. So I'm not in the position to actually to address. You have to like find the CS to actually see how to solve this. Okay. Yeah. 现在手续是 think could oh this one I have no idea. Yeah. Not in the position to usually usually the CS will be having if you could actually like to reach out more to the CS and then see like whether you can find someone who by right it should be having someone who understand the option well to address your questions. Yeah. Okay. So not in a position to 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 because this is the first time I see this as well. So yeah. Yeah. Since nowadays still got human, you know, still got human. All right. So yeah, going. So I think it's like since like nothing about the I think those CS questions, right? You can actually reach out to our customer service, so to try and see whether they're able to like solve your issue until the end. Okay. Hope you can feedback too. Yeah. Okay. Yeah. Just type Asian. Yeah. And then you also can feedback to the CS team there so that they will be take this matter as your feedback as well. Because not within my my authority or area already. Yeah. Okay. All right. So like since like there's no any further questions about the the whole management things and the features things, I'm going to wrap my live sessions. Yeah. Okay. And then not sure that when I'm going to come back. And then since like I got a lot of things like to be go on. And then yeah, in the futures I may also like shares may or may not share some of the studies that I think is interesting, and then maybe shares to you guys. For example, like some of these very interesting insight that I found. Okay, some of the things that I've been working on, and then yeah, of course I can't like disclose everything here. So yeah, but I'm working on something. See whether I could find out something interesting could should share you guys. Okay. And then, yeah, thank you guys for staying over the course. I really do appreciate you guys supporting along the way. You know, yeah. All right. So Sunny, so it is uh because first it's also the first time I see this kind of problem. So that yeah, you I'll try. We maybe really need to like see can like we could like actually like copy your question and then paste and feedback, but that's what we can do lah. But eventually still have to leave up to the CS team to actually handle it. Yeah. Like yeah. And I'm sorry to hear that. Okay. All right. Right. Thank you guys. Thank you guys. And then I hope I do able to like speak with you guys again. Again. If you are in the Singapore, make sure you pay a visit to see Elwin or Olwin. You'll be at the Boo Fest. If you're in Malaysia, I'll be at the Invest Fair there early at for from 10 to 2 o'clock, something like that, and then you can meet me there as well. So that see you guys there, and then I hope you guys do enjoy the whole journey. Thank you. Vietnam don't have. Okay, thank Vietnam don't have. All right. Thank you. Good night and goodbye.